All right, shifting our focus to China here. There's been obviously a lot of concern with Taiwan and the U.S.-Chinese relationships. Brian asks, what are your thoughts on outlook on China and the Chinese equities like Tencent and Alibaba, which are in the portfolio?
Will, I think you should answer this.
Well, I'll say that because of the government risk, we knew going into it that the position sizing was going to be key. And so they're not a position size like Amazon at 5+% positions. And that's because of the inherent risks with regards to the government being able to take over private enterprise. So on purpose, we kept those position sizes small. That being said, we're very constructive on just the demographics that we see in China. 1.5 billion people. Tencent and Alibaba are businesses that are part of that internet economy. They provide mission critical services to the people in China. And so from a valuation standpoint, they're probably one of the cheapest stocks within the portfolio. And they have incredible characteristics of pricing power, network effects, very strong balance sheets. It checks all the boxes with the framework that we've been talking about tonight, with the caveat of the concern that there could be a scenario where the government takes over these private enterprises. And so again, we want to participate in the upside that we're seeing, but we want to position them small enough so that, in the blow up scenario, it's not going to affect the performance and your wealth long term. So our eyes are wide open, but the forward expected rates of return with these businesses are tantalizing enough that it warranted a stake within the portfolio.
Yeah, and I would just say that I think, China and India are two of the markets with sort of some of the most exciting growth prospects. They're enormous markets. They've got massive numbers of people coming out of poverty and joining the middle class, and they're going to have, and they're having increasing relevance in the world and increasing wealth, and increasingly becoming trading partners with more and more other countries. China is the largest trading partner for many, many different countries in the world now. And so we just think, again, we want to participate in global wealth over time. And we think that these two businesses are good additions, given the dominance of the businesses, given the price we're paying, and given the diversification that they give us, given the unknown future. So those would just be some other comments.
All the stocks we've mentioned should not be considered a recommendation to buy or sell the stock. Consult your financial advisor for your specific situation. You can also request from YCG a list of all the securities that we've recommended over the last 12 months. Thanks for watching. Check out our other videos and we'll see you next time.